Yo, what's good? What's good, everybody? See everybody starting to tap in, trickle in. So far, we got about 10 people. Give it time for a couple more people to go ahead and trickle in so we can start dropping these knowledge. Hope everybody had an amazing weekend. Flingy, what's good, man? What's going on? I love it when I see familiar names popping in the chat. All right, cool. Well, we got 20 people in here. Y'all can hear me, right? Drop a yes if you can. I always like to check, make sure my mic working. Tony Rivera, what's good, fam? All right, so for the ones that's here, we can go ahead and get started. I appreciate y'all for go ahead and tapping in this Sunday. We're gonna look at how we can improve trading using the RSI. I don't use it frequently, but when I do use it, I always maximize um, the most out of it. So we are going to, or what I'm gonna do, I'm gonna give y'all guys my little strat that I use with the RSI in finding convergences and divergences, and pretty much show you guys how this can play out in your favor if you like to do swing trades, or if you just want to pretty much find out the sentiment or the direction the market is probably going to be heading into over the next couple of days. So let's see. Right now, I have the SPY pulled up. I know a lot of people like to trade that, so I was just thinking that this would be the first one that we'll take a look in. So I guess we can go ahead and get started. The people that's gonna join. The people that's gonna pass it by, they're gonna pass it by. If you're new to the channel, go ahead and sub to it. I greatly appreciate it. If you're watching, go ahead and hit the thumbs up, like the video. That way it can push it out so more people to be able to catch on to these strategies and these videos that I try to do once a week. So this is what we're gonna do. Right now I have the spot pulled up and I have the RSI pulled up. One thing about the RSI that I like to do, and just in general when I chart, I like to color code everything because I like to have visual cues when I'm trading also. So if you don't know what the RSI is, it's pretty much called the relative strength index. And what it does is it measures the speed and the change of the price movement in the stock. So it's measured out between 100 and 0. The high spots on the RSI are 70, 50, and 30. So I got my 30 marked green. I have my 50 orange, and then I have my 70 red, since those are going to be my key targets that I'll be watching for on the RSI. So pretty much if you want to do that, you go to the settings if you're using TradingView. On Webull, you can't really customize the visuals too much, which is why I do most of everything on TradingView. And you go down and you find under style, you go down and you find the upper band, the middle band, and the lower band. So I like to take this and I like to make the 70 red. Like I said, I like to make the 50 orange, and the 30 I like to make it green. And this is all just so my brain can put together. Green means go, orange means neutral, red means it's running hot. And this just helps me make a better decision when I'm just pretty much eyeballing the RSI and trying to make a decision on which way the trade's gonna go. So um, the first thing I like to do is I like to start with the bigger time frames. And with the bigger time frames, if we go to the monthly, and we start looking at the RSI, which is what we're gonna start off with. And then once we do the RSI, then we're gonna go and actually do the actual chart. So the first thing you want to look for is you want to look for any type of divergences. What that is where you're seeing the trend hold up and you're seeing the actual movements bounce. So I forgot to let you guys know I have special settings for my RSI also. Now, if I go to my settings, you go to inputs, and you're gonna pretty much watch the 34 on the RSI link, and then for the actual moving average link, I'm looking for 50. That's just my two settings, only because I like to catch it in swing trading movements. You can lower them, and that'll help you more for intraday, or you can make it longer. That helps for longer term buying and selling. But 34 and 50 is pretty much the perfect time frame for me because I can catch the movements over the next couple of days. So that's what I enjoy about having the 34 and the 50 as my settings here. So once I have those, it's going to change the speed of how fast the RSI is going to track the momentum. So when I'm on this monthly chart, and we probably could look at the 3-month chart also. So we're going to start looking for divergences, and this is pretty much, like I said, where you're going to see the actual RSI bounce off of a trend line like we do when we're looking at charts. So one thing that you're going to notice when you are drawing these out, when you start changing time frames, the trend lines are going to be in different spots. So as we actually go down into time frames, what's going to happen is I'm going to show you guys how it all works, together. So we drew a trend line right here on the 3-month chart, and we see a bounce here, and then we see the second bounce there. So once we scroll down to the monthly, we're going to see these lines correspond in different positions, which is cool. We just have to see how to make those line up too. So now that we're on the 1 month, you got a divergent trend here, and you kind of got one here, but it's too drastic of a bounce between here and here. So I'm just going to take this one because it looks more solid. So once you're on the monthly and you get done with that, you're going to go down to the 1 week. So once you're in the 1 week, like I said, these lines are going to start showing up differently and differently. So I will end up drawing a trend here, And that's pretty much it on the 1 week. And then on the daily, you'll start seeing how this is all gonna play out in the long run. So this would be my last frame, which is my daily, that I actually draw a divergent trend on. Because I like to make it to where I don't have to update these every day. I like to play intraday and utilize the levels that I've drawn out already. So now that we pretty much started from the 3 month and then we worked our way down, you see now it looks kind of wonky. It looks crazy that you have these floating lines in different spots, but it all lined up. So what we're gonna do is we're gonna go down to the daily, and we're gonna make sense of it. We're not even gonna look at the charts. How about that? We'll just check this out. So now that we have the trends all drawn out and we're here on the daily, you're gonna go down to the 1 hour, and this is where you will be able to start looking for entries or looking for bounces. So remember, I have my RSI levels color coded. Red for 70, which is overbought. Orange for that 50, which is kind of a neutral area, and then green down here for buy. On the 4 hour, we're not drawing any more trends. We're just looking for big levels of bounces. So as you can see, once it gets down here below the 50 and it starts coming down to this one, since the RSI is slowed down from, I think the standard setting is like 8 and 21. Since I moved it up and made it to where the moves are a lot more slower between the 34 and the 50, these moves might take like 1 or 2 days, maybe 3 days to completely go back around and reverse back to the upside. But this is why you buy longer contracts, so that way once you make those swing plays, you can actually catch the momentum back to the upside, and you'll be able to hold until it hits one of your trend lines up here. And this is where you'll start taking profits once trend lines here, like up here starts hitting. You start trimming off, or you start taking profits on your contracts. So if it breaks, that's kind of like a oversold momentum for the RSI for me. Anytime it breaks a lower trend line below the 50, I'm looking at swinging back to the upside, especially it drops down and makes its way to the 30. So this is just the 4. If we go down to the 2, then we're able to see how the volatility goes. Once it breaks below here, you get a drastic sell, and then you get a sharp movement back up. You get that sell, movement back up, sell, movement back up. So these are where you're looking to enter your swings for the upside anytime it breaks these lines. And these are lines that were drawn off a bigger time frame, so they're more concrete. Down to the 1 hour, we're seeing some areas to where that 30 actually was touched. So even if you're not looking at candlesticks, if you just want to be a straight RSI trader, it's possible, if you know how to actually use divergent lines and you know how to read the charts, that send you back up, back to the upside. And these are called for, these are some of your 20, 30% moves that you will catch back to the upside. So if we take this and we go and apply it to the actual charts, then we're gonna do that the same way. So if we go and look at the candlesticks, which I don't have any of my levels drawn out right now, but we can go through and draw them out. I pretty much start like I did with the RSI. I'll start here on a 3-month frame, And what I do is I would try to find a solid trend. So first things first, I will look at this trend here and probably this one right here. I'll go down to my 1 month chart and I would do the same thing. And all of this is stuff that we did when we was marking up our RSI. You're just finding reliable trends that should hold up in the case the market decides that it wants to pull back. So we're on the 1 week right now. And we're just about finding majority of our support areas. So once we get on the daily, that's going to be like our last little bit of trend lines. With the daily, I'll take that trend and I would take this one. I try not to find too steep of a trend because those are easier to break. I try to find a nice, well-balanced, kind of a 45-degree angle trend line to pretty much catch the moves when it arcs up and comes back down. You try to find a reasonable levels to start. How far back should we look for trend lines to start? Like I said, I normally start at the 3 month, maybe the 6 months, depending on how volatile the stock is. And then I work my way down frames from there. So right now we worked our way all the way to the daily. So now it's time to start focusing on which direction the price section is heading in and when we're going to start looking for a bounce. And once we get done looking at this, then we're going to start lining up the RSI along with the charts that we have here. And I'll show you guys how pretty much how to take entries on them. So right now we at the 1 hour and we see our closest trend is right here at this 599 to 597 level, which lines up with this. So pretty much what it looks like it's doing is making higher lows. It found support here, over here, and now we might see it find support like right around there. That'll be where we'll be looking for support at. Where's my box? Rectangle. Boom. All right, so we'll see how that lined up for support over here. And then the same thing happened again right here. Well, possibly happen again right here. So we'll look for a price drop down here, and then this is where you want to grab calls it if the prices actually drops to this trend line. So if you need some extra help in deciding, all right, what we gonna do? So right now I have the 1 hour pulled up and charted. So now what I'm going to do is I'm going to look at my RSI and see what my RSI chart is showing. So like I said, this purple line, the actual RSI is moving at a 34. That's what I have it set on. And then this yellow line is my 50. So how do we read this? Well, we're a little bit above the neutral zone. That's my 50. So just looking at it from a 1 hour standpoint, these are the areas that I would want to buy the dip. This white line here, here, and down here. But what could possibly happen once it gets here, if it doesn't bounce off of this moving average here back to the upside and it crosses, then we'll see a bounce here, but then you will see a rejection once this moving average is curls back over to meet the RSI, and then we'll see a move down here. Now, if we get these short bounces like we kind of see right in this zone, you can read your RSI just how you read charts up here. So you will look for the RSI to kind of bounce somewhere in here. And what that does is, if it bounces right here, it lines up with this moving average going to the upside, and then it pushes back up towards your overbought levels. So what would you want to see the price action do up here is, if we see the sell-off, you will want this bottom here around 599 or 598. You will want to see this line up with the RSI box down here. And there's your confluence, and you can start grabbing calls for the move back to the upside, which would be back to the upside here also. So if we see this move, and let's say the RSI doesn't hold, the candle closes below and it bounces here, well, what we would be want to look for, what we want to look for is a break below this trend, this actual trend here. We'll watch it break below and start trading to the downside. Now the bounce will probably be this second box that we have right here. This bounce here will probably line up right here. If we line up right there, then like I said, you will look for the rejection. A lot of times when you see me talking about just straight price action on the chart, you're gonna want to see this becomes, instead of it being support, you'll look for the support here, the rejection here. So you'll look for the support here, and you'll look for the rejection here on the RSI for the move back down. What would the move back down send us to? I can't tell you exactly, but it's gonna be somewhere, let's make it somewhere in here. I'll make that move kind of narrow. So that means you'll see the SPY come down, and you'll see a move to 594 and 595. So that move down here should constitute a sell below the 50, and then a bounce somewhere around these trend line areas here. Remember, if we see it break below, then that's pretty much a panic sell, kind of like we see here. You can find an area on the chart to double down at. In this case, you will probably use, let's say, you'll probably use this area right here, where it gapped down at. You may see levels retest here, and you will see the actual RSI come down here, and this is really where you will want to double down on your calls. If you get down here, you will buy and enter here. This would be a dip buy for the move back up, and the move back up would be from here back up to here, back up to here, where you'll need to see levels be retested before attempting to move here and then a push back to the upside. And so this is how you break a chart down a couple of days or just in advance. You know, we're going into tomorrow and we're trading the SPY, and let's say these start hitting, then we already have a game plan kind of mapped out to say where we're going to enter out, where we're going to exit. what calls we're gonna grab, because if you go and look at some of my other videos and I talked about choosing strike prices, well, you have these levels already mapped out, these boxes. So the top and the bottom of these boxes are gonna be your strike prices. Just how you see this 597 range right here. You see that kind of double lap, one from here and one from here, that lets you know 597 is probably going to be a high spot, because that's where prices are actually linking up at. Then you'll have another strike price at 596, one at 595, 594, and then down here around 592. So once these trend lines start breaking, then you're gonna start to want to take away some of these lines and then start finding new structures, same as RSI. So if we take these down on the 1 minute charts, like I said, some of it is going to look a little different, but the lines are all gonna be able to be used in a way that it'll help you dictate which direction you're going. So right here on a 30-minute chart, you can see each time that the prices came down here on the 30-minute chart, well, on a 30-minute RSI for oversold, since my settings are actually a lot higher than most, you get a true 30-minute move, and it doesn't oversell here. It actually bounces back to the upside, and it rejects briefly around one of the first trend lines. Same thing here. It didn't quite reach the 30, but if it did, then this would be where you'll want to grab calls for the movement upside. So going back to comparing them with the charts. So we see actually this movement goes a little further back. All right, so this is the tricky part about the RSI, which is why I said in the beginning of the video, you want to have time on your swings. Of course, if you're going to want to swing trade, the thing is to go, at least my personal opinion, is 2 weeks out. And that's just because the Greeks balance out once you get around that 2 week mark. The safest thing is actually to go, 3 months out or further, because you're paying extra to get a truer payout for holding over the days. The theta actually comes down tremendously when you go past the 3 month range. If you go out 2 weeks, you're gonna pay a little bit in theta, but the closer you go into money, the better. You'll be able to override that theta burn with a healthy delta increase. So here we are on the 30 minutes, and it bottomed out around here. So you would have made an entry at 569-ish, and then you got a brief dip here on open, which dropped maybe $1 or $2. So that's 568. You entered at 569. So it's not too bad of a drop. And what happens is you see the RSI down here pop up to our first trend, and what happened? It rejected, and then it trickled back down. Now, even though the prices came back down, the RSI didn't drop as much. This is a diverging. So you're seeing the price move down, but you're not seeing the RSI meet. This could have been a low volume day where, the price action moved in a drastic way, but your indicators didn't quite line up with what you were seeing. It's kind of like what we saw Friday. So you're still holding. This is Thursday, this is Friday, and Monday. So far we bought down here, and we would have had to hold it for about 3 days before we got the final pop and then the actual move to the upside. So as you can see, it made it back to this trend down here, and then it came and it hesitated around this trend line here, and then it kind of popped and gapped up, and it took out the rest of these trends, and it oversold. It became overbought. before it finally came down. So what are we looking for now? We have it here on the 30, and I'm just using the 30-minute chart because this is the most balanced chart to me for intraday trading. So as you can see, if you're taking puts, you're probably getting nervous because you're buying up here and you're seeing that it's overbought. And you probably a lot of people rage when they say, oh, it's oversold, oh, it's overbought, it's overbought. And that's probably true, but the price action still comes up, and it takes a day or so to try to burn out as many as the bear as possible. You have to remember, the market is a mental game. Like you can't be weakened, and you can't allow the money fluctuating up and down to dictate your conviction. So you can take a lot of people's words, but you have to come up with a strategy of your own to have conviction in, just in case, you know, the alert or somebody else's word comes through and it doesn't quite line up. So we see it arc up here, and then it eventually comes down. Well, what happens? You see the RSI do the same thing, but it's a bit delayed on the price action. Why? Because the only true thing is price action. Everything else, you know, it tracks it in time as best as it can. But we see the arc follow with the rest of the market. Then we finally see the RSI start to cool down. And it came all the way down here to this trend line where it bounced. So right now we're not seeing too much of a movement down. Here it peaked at 599, at 600, and then it bounced down here at 594. So it's about a $5 move to the downside if you would have swung puts here, which that's a good move. You have to have a plan to exit, and when you start seeing the price action actually line up with something, with the move that you're seeing down here as far as a trend line bounce, then that's when you start taking out. You can have a percentage amount, or you can have a dollar amount. It's on you, and it's for you to decide pretty much where you want to take profit at. So what happens is, now that we're going into a more of a selling sentiment, you watch the price action on the RSI bounce, and you're looking for a rejection in the trend lines. That rejection here leads us to another downward move, and then eventually a gap down in the market. So what did that show here? We've seen the rejection here, which lined up there. We've seen the rejection here, which is the second move up. And then we finally seen it trickle down, which is probably more of a higher volume day, because we've seen this come down and we've seen the same price movement follow it all the way with the RSI until it bottomed out to the 30, which is headed toward your oversold levels. So once you buy down here, you're looking to hold. You're buying your swings, you're taking profits. You're buying your swings, you're taking profits. You're seeing the RSI bottom out down here. You're seeing the slow price movement on the RSI, but you're seeing it retest the levels for the second time. And then you coming up, and once it moves to the upside, here you are, your gap down right here meets with your trend line right here. This is where you'll look for rejection and take profit. And you can play puts back to the downside until what happens? You see this moving average comes around, the RSI meets it, and it lets you know, hey, this is bouncing. We can be looking for another move back up, and then you're creating your trend line from here to here. And you're making a move back up, and you're holding to where we are now currently. So we did see a cross of the RSI here. But what we saw also was a trend level hold right here. And it gave us a bounce back bounce back to the upside. And I think one of these days were days we had data come out and, the market reacted to it in a positive way, which um, canceled out, the rejection here. Well, the rejection up here. And it actually pushed, and I think the market closed green that day. So what we're heading to right now, we could possibly see, another move up here or a push towards the overbought levels. That'd be what we'd be looking for. And what would we do? We would look for, let's see, Monday open. So Monday open would be about right here. So I would probably say if we was to open higher, you would watch for the RSI just based off of price action. SPY normally moves between $4 to $7 in a day. So let's say we went straight vertical. It says 602. We can do 5 to 6. So let's say the move came up here somewhere, because they was continuing to squeeze out bears. Well, we'll get a move up here, and you will see it consolidate sideways around this level. And then we'll watch for the RSI, and the RSI should come up here, and we should see a similar move like it did here, or like it did over here. We should see a similar move around here to where we'll start taking puts, and we'll just let that arc and roll over and make a head and come back down to the 602 level. So right now, 602 will probably be, that'll probably be my new level of support if we was to come up to this level. As long as this trend holds here and this trend holds here, 602 will probably be my next level of support. And then we'll see the RSI trade to the upside, round itself out, and then come back and retest levels somewhere around here. So I hope some of this is making sense to you guys, and that you're able to kind of take this and formulate your own strategy. This is basic charting. It should be basic charting before you bring all the extra indicators and additional stuff into the actual charts. If I was to go and I was to look at Nvidia, I'll chart this with y'all. Right now I'm on the 6 month. Let's do this because I hate scrolling. As you can see, Nvidia is just an absolute monster. I don't even want to go that high because this trend's way higher than that. You want to find reasonable trends, attainable trends. And that's my thing with trading. You always, if you're gonna go the cheaper route, then you always want to find out what's attainable as far as, price targets and things of that nature, to the downside and to the upside. So right now I'm on Nvidia's 1 month, and I'm gonna start finding trends here, just because they look a whole lot healthier as far as midterm movements. So now I'm working my way from the 1 month, and now I'm breaking it down from there to the daily. This one looked like it already broke, yo. I was looking at this one, but this one right here already looked like the trend has been broken, which it can recover, which it looked like it has. recovered that trend back, but I don't like trading open candles still. Well, this was the 1 week. Even though that structure is broken, I'm not gonna keep it. I'm gonna go and I'm gonna find the closed candle pattern to use instead of trying to use in that broken one. So I will use that one, and I will use probably this last one here. So now that we have it all mapped out here on the chart, next thing that we're gonna want to do is go down to the RSI and start looking at that. Make sure. Yeah, we all mapped out down to the daily. So now we're gonna start looking at the RSI, and we'll start mapping it out like that. So Nvidia RSIs, I'm pretty sure the way that it moves is gonna always be a oversold ticker, a overbought ticker. And we can see already without even drawing any trend lines, we can see that it always gets bought up around the 50 on the RSI. So right now I'm already working my way down to um, the 50, and I'm on the weekly chart. Last time that it's been below the 50 was from April to this was 2022. So pretty much this was 2018, 2019. So I'll be looking for another possible pullback on a stock on Nvidia down here because it's going to be due pretty soon. Really anything that possibly maybe this trend right here, and this is kind of consolidated, but I'll take that one, and then I will draw out this one. All right, so that gives me two trend lines on the RSI to abide by, and look at that, it shifted from being underneath it to being above it. What I see already, I see that moving average and the RSI is going to be meeting pretty soon. So without even seeing this, what I saw was that Nvidia needs to make its way back down to that 50 RSI on the bigger time frame. So that just could pretty much say, all right, I'm not gonna get completely sold in that, but that's a possibility coming up just based off what the market is showing me right now. We have had opportunities to where it came down here and it bounced back up and it reclaimed support, and that's what we want to see. I mean, the market is made to go up, but right now, as we see, just like over here, the moving average is starting to curl down. We see the RSI break and reject and then continue to sell off. We've seen it move up, come back down and retest. So we've seen a rejection here. We've seen a bounce here. Now we're coming back. We might be watching for a rejection coming up again. Possibly here. So we're on the daily. We're looking for the last little support that we want to draw on the RSI. I I'll probably take this one here. So what I'm seeing is I'm seeing consolidation. I'm seeing a rejection here, and then I'm seeing support here. So now I know what two ways I'm going to be trying to, now I know what two ways I'm going to be trying to catch puts and calls. So once I start going down into my hourly time frame, which is where I'll be looking to make my decision on which way I want to handle my options contract. Like we seen the bounce, well, the minor break and then a bounce here, which is where we would take calls. This is probably what we took calls at when it was trading at 132-ish. And we'll just see how it lines up on the other charts. And notice how these boxes that I've drawn on the daily, they mean something. I draw them on here. I go down to the 2 hour and the 1 hour. You start seeing the boxes show and paint a different picture. This is why it's important to check your different time frames. A lot of people may not know this, but the trend lines shift based off of which time frame that you're going to be on. So what are we going to be watching for? Well, if we look at the chart going into the other day, we seen a gap up and then we seen a gap down. Let's find it real quick. Okay. So we can go on the 5-minute chart. So we seen the gap down, which was supply or sellers. We seen that right there. So what happened was, once we saw that bounce right here around 132, we seen the movement back up. We seen the retest of supply or sellers right here. And then what happened, it gapped up in order to push prices higher above the sellers and continue to work the price up to the upside. So what did that constitute on the RSI? So this is the 5-minute. When I'm trading RSI, I'm not big on the RSI on the 5-minute, just because I like to avoid fake outs. We've seen this long consolidated movement here, but we did see on the 5-minute, we've seen it drop down, and then we've seen the RSI rise back up here. But guess what? The theta just decayed us. If you're short-term contracts, theta just ate us up for, let's see how long, Monday, Tuesday, Wednesday, then it dropped again. So the theta would have ate you up for 3 days if you grab calls as soon as it bottomed out on the 5-minute chart. Which is once again why you want to go longer. But the thing is, you also want to have trend lines to use in confluence. If you're buying here, best believe there is no trend line. It's more so probably a psychological level. Gapped us down and it finally bounced off the trend line that you had from a bigger time frame. And then this is the true reading for the RSI right here. On its way back up, it took a route all the way back up to the 70, which is overbought. And then what is it doing? It's waiting it out. So if you're bearish, you're getting weighted out right here because you took the signal off the RSI. So what you're probably going to do is the same way you seen this down here and you would have bought on the second time, you would wait for a possibly another move back up. And then that'll be your move to take puts on, back when it's above the overbought level on the 70. So if it pops up here, you're taking rejections here, unless the market's just moving. You're taking this consolidated zone here, and you're looking for a rejection back down to 139, back down to 138, and then possibly 136 and 135. And this would just be where you'll watch the RSI. And what the RSI showing, those boxes that we drew on the daily, they have a significant meaning here. So that means if it was oversold, overbought here, it's waiting you out. And then once the boxes come, once the RSI reach this box, you're going to see the price bounce, push back to the upside, and then the 141 will lead us to the second time that this RSI comes above 70, which should constitute you buying your puts around here back down to the downside, which should give us a truer move, and the RSI a cleaner move back to the downside to line up with some of these levels. Because eventually you're going to see the RSI down here at 30, and if you're still holding puts from up here, 30 might be around here at 135, 136. Or 30 could be around here between 138 and 139. The thing is, you made your move up here at 142, so you should have decent enough profits to take out and not be too greedy and wait for this 30 retest on the RSI. And that's just on the 5 minutes. But you're gonna see different. You're gonna see these in different areas. Once you start switching through on the 30 minutes, I don't know why, but you're going to see your trend lines, you're going to see your boxes, they're going to fall in different areas. And what you want to do is pretty much use them in confluence with your trend lines. So you're reading the RSI and then you're reading the moving average. If it drops back down, then what you'll be looking for is this moving average to come up and meet it somewhere here, which would constitute the sideways movement, and then a move up to 141. This should line up and push it back up into this white box here. But what we're seeing is a consolidated movement sideways. And when you see it move that sideways movement, then that's how everything pretty much tells you a story before it happens. So this is how you utilize the RSI to your advantage. This is the best way to line up all of your plays and then know why you're getting in. You're using something in confluence to determine what you're seeing down here and vice versa. And then you're using areas of consolidation on the 30-minute charts to pretty much tell you, all right, I want to find my strike price in here, in there, in here. And these are where I'm going to hold. And these are my levels I want to take profit in. If I want to go further out, I can use those profits, reinvest them in the calls to go higher, and ride it out like that. And then you can do it with puts. So this is just a quick little strategy just to show you guys how I use RSIs and find diverging. And then it's the same thing with if you're finding convergences and you just want to find a resistance somewhere. So if you just wanted to find something, you'll go on the daily. You'll find this. You'll probably use that one. And then what happens is you'll start actually seeing in here what the price action would squeeze and slow down. So once you start breaking into the hourly time frames, you're painting yourself a picture. You can have just the RSI chart open and you can trade directions. You know, once the price action gets up here, you know it's gonna get a little choppy, even up here. Puts above, puts right here. You're looking for this right here to meet in conjunction and decide whether it's gonna bounce or break above it, or whether it's gonna reject and push back down further. So once you add the chart to it, you can make those calls. And this is how you get conviction. This is how you get confidence in your trading, knowing how to master the indicators that you already use. Like I said, if we see a move up here, we're looking at puts. This move up here, it gives me this right here for a rejection and a possible move back down. Or we see the bounce and it holds up here. If you see a spike up and then you see a retest right here, then we should see this moving average and this RSI start to cross for the move back up. So I hope you guys got some out of tonight's trading or charting, and you'll be able to add this to what you guys normally use already, just taking it to another level. But if you're in the Discord, like I said, go ahead and reach out to me if you have more questions. I'll be able to answer them or go over them one-on-one with you guys. If you're in the Patreon, same. You should be already be in the Discord. But anyways, if you're on after hours, you can reach out under any of my posts. And I'll see if I can answer your questions best as possible on there. But the easiest way, like I said, just come join the Discord. Great family there. We making big moves, big moves. So I appreciate you guys tapping in with me, and I'm gonna go ahead and call it a night. And I got some more stuff I gotta chart up and get ready for you guys tomorrow. We'll see how it's gonna treat us. I haven't even checked the 24-hour market yet, so that'll kind of help out in determining which direction we'll be heading tomorrow. But we're gonna lock in either way it go. It's your boy Royalty Trades. Appreciate y'all for hanging out with your boy. See y'all tomorrow.